So I'll start now. So it is my pleasure to introduce Mr. Manohar, the CRO for Lending Card, with a wealth experience. Oh, is it? Hello? I can hear echo in the. Yeah. So with a wealth of experience in risk management, Mr. Manohar has expert in navigating the complexities of credit, operational, market risk. Today, he will be discussing the full loan cycle. We've requested him to share some of the use cases which he thinks are important and offer actionable insight on how risk management can be strengthened across the financial sector. Maybe and how account aggregator can be a important tool to strengthen it. And he will also present some ideas for the teams to build upon focusing on proactive risk strategies and innovation in mitigating the emerging risks. So I'll hand over the session to Mr. Manohar. Manohar is ex-banker and he has been representing a Standard Chartered also prior to this, and he was MD at Standard Chartered Bank. So Manohar, over to you.
Hi. I don't know who all are there, but a very thank you, Abhishek, for the introduction. But a quick introduction from my side before I start off. Uh, as Abhishek put it, 24 years of work ex, 25 now. I worked in various geographies: India, Singapore, Dubai, Frankfurt, and I have worked across the consumer banking life cycle, from products to risk management to digital banking. I've also worked with fintechs, and my last role in Singapore has been very fruitful. I joined Lending Card as a promise that we will make this one of the India's leading fintechs to serve SMEs and serve financial inclusion. Um, Here I've joined as CRO and also manage analytics. So I've also been balloon volunteer at iSpurt, which rolled out a lot of DPI projects, including Account Aggregator. So I'm very excited about Account Aggregator. Very few uh, countries have even attempted to do something like this. Very close systems which call themselves closer to Account Aggregator are in Singapore, some briefly in Australia, and Hong Kong. But they've never been able to put a proper public infrastructure in place in terms of Account Aggregator. So I'm very excited. I've seen the journey through from the start to as we speak and rolling out in many banks. And as Lending Card, we are one of the first adapters of Account Aggregator. Uh, I have in fact advocated Account Aggregator across the organization, especially in risk management, because I think we can leverage more than what is being told today. Because most of them use it for, say, underwriting, or maybe for PFM or some wealth related activities. But I think it has got too much potential as it expands into just banking transactions, going into GST, going into insurance, going into utilities. I think it will be a vast amount of information available for us to do the entire life cycle for a customer. So what I will do is I put forward a very rough picture of the lending cycle. I'm sorry, I've been traveling, so it was difficult for me to put this through, but I put a life cycle there, and I will brief out what could be potential use cases for you all to go and either innovate or think about it in your risk management practice. So I'll go through the slides. I don't know whether you're able to see the slides. Abhishek, just tell
Yeah,
me
it is visible. Visible.
is
Yeah.
visible. So I will go through this in more detail. These are some use cases are already in motion, but some use cases are very potential, and I think we are as a Lending Card trying to tap some of this into our entire life cycle. So if I broadly go through the life cycle of credit lending uh, proposition, right, more in a retail side, how do you start your credit origination? You start by doing a target customer segment. So where today I think a lot of people are using it, which is maybe real time analysis of cash flows in their bank accounts. We are able to target right customers, but I think what we are not doing right still is how do you use that particular customer segment, which goes from people who are using Jam to actually SMEs who are managing the entire, their working capital, right? So how do you segment that customers and appropriate, get the right target and the right amount of funding for them? I think account aggregator there would be very, very helpful, because a person using one bank account to multiple bank accounts, uh, there is a large difference, and we can actually target the right segments for these customers. I think our account aggregator at the right top of the funnel can be very, very helpful in targeting right customer segments. We all know about document collection today. We are seeing higher adoption of account aggregator across our lending process. So that brings down some of the friction we have in terms of collecting bank statements, doing a PDF, then doing OCR on it, or even doing scraping, right? We have a lot of organizations in India today who do this activity, and a lot of lending institutions have tied up with them for basically document collection, right? Uh, is it really necessary? Can we use account aggregator to further propel the non-friction process we have? I think lending card today we are able to get 30-40% pulls from account aggregator. What we want to do is enhance the GST process to make it more easier and frictionless for the customer. So we can triangulate both banking transaction data and GST data today to underwrite the customer better. So I think that is a big item where account aggregator. I think this use case of document collection, as and when the account aggregator moves into newer areas, which is insurance, which is GST, make it more robust, right? Frictionless and robust. I think it will improve underwriting for customers who are in need, right? Both from financial inclusion and from SMEs. Then alternate data falls from there, because as the account aggregator access increases for me, I want to use more and more authenticated, non-fraud data into the underwriting process. So alternate data, as and when more and more sources come in, telecom data, utility data, insurance data, GST, and banking transaction anyway there. So that gives a big perspective on how you can look at a customer, model them better with tons of data. Today, what is happening is, for banking transactions, we use account aggregator. For GST, there is a mix of manual and digital process. For say telecom information, we have to go outside and collect. So a lot of that is not fully authenticated data. I think I'm looking forward in the next 2 to 3 years to look at how we can get all sources of data which is required to be acquired, including health data, right? So those are the stuff which we are looking at. How do you enhance your alternate data capabilities? Because as and when we move from a more static data modeling to more dynamic data modeling, that is using AI, etc., because the amount of data which is available is humongous today, right? We can easily profile a customer or an SME much better than that what we're doing 3-4 years back. So I think that is one item we are looking forward for the account aggregators to make sure that we have enough information for us to do a customer profiling. Adaptive user journey. Uh, no, thanks. Sorry for the this one. So adaptive user journeys. I think in the digital process, uh, as and when the account aggregator improves, right? What we expect is that we will have a more frictionless process. Today, I cannot say in an SME process that everything is frictionless. I want to make sure that from an individual personal loan to a complex SME loan is frictionless, including a mortgage loan, right? Is frictionless, and less documentation to be collected, because we don't want PDFs to be available everywhere, scraping of information to be done, all that, right? Without account aggregator, we are able to collect all the information. Then we don't require uh, the journeys, and journeys can be actually the customer journey, which is very complex today. in many of the platforms can be easily made sure that the process happens maybe in less than a minute, right, to give an approval. So I think we can use more adaptive user journeys as we build the credit origination platforms, or we can build better models. Then the next is fraud mitigation. Now, this is a big item, right? Because today we have in a market like India, which is very complex, all documentation, identity thefts, okay, these are very common, okay, and I mean, I'm sure you'll hear a lot from other institutions, other lending banks, etc., right, where we think the documentation can be forged, can be fudged, can be overridden. We have seen that in bank statements where everything is, a lot of things are fraudulent, right? In the sense, sometimes credits and debits on batch. There is fudging of information. Even in a PDF, a complex PDF document, people can go into properties in the PDF and do changes, right? So using account aggregator, I'm only not talking about banking statements. You can easily do a lot of transactional statements beyond just banking. You can fudge. So today, I mean, fraudsters are always ahead, right? So we have to be ahead of them. I think account aggregator in that sense is a very, very useful tool, because today I can make sure that if it's an authenticated information which is coming in from a bank, okay, I don't even have to spend money on frauds, right? I mean, if I'm able to get a proper identity check done, and I think that using our DPI, Aadhaar, and a combination of Aadhaar and VKYC, we're able to mitigate that to a large extent. We are also looking at tools to mitigate uh, PAN Aadhaar mismatch issues. Okay. Similarly, banking transactions and banking frauds are high in many of the markets in India. So, with account aggregator and more adoption of this, we'll make sure that the documentation fraud, which happens today, is mitigated to a large extent. And I'm looking forward to that. And we can also mitigate a lot of transactional frauds which happen, but that is more real time. And as and when the DPIs increase on this, we will look at how we can triangulate a lot of information and make sure that the customer profile matches and we don't have identity thefts there. So we are looking at all those angles also, as and when we get more and more data from account aggregator. So I expect the account aggregator to help us there. And I'm sure there is a roadmap to make sure that many data sources come into the account aggregator ecosystem. Then I'll move to the next slide, which is basically, so we have finished the origination part. We will look at the next part, which is looking at how do you assign limits and pricing optimization, right? So I'm looking at models. So using account aggregator, see, a lot models have two components. When you build a model is effective today. Okay, I'm talking about underwriting model or a fraud model. Okay, is very effective when you have the right data there, right? A lot of times you have a lot of data mismatches, data cleaning, that takes 60% of the time spent on creating features. For creating those features, the data cleansing activity takes a humongous amount of time, because you don't know whether the quality of data is authentic. They do a lot of validation of data before you start building the model. So with the account aggregators type data, where you have both banking transactions and other alternate sources coming through account aggregator, which is authenticated, where we don't require. I mean, you have a lot of data available today where we can purchase, right? But with account aggregator, it will be an authenticated source which will come in, which is properly authenticated, consented by the customer. That data, when you use in building a model, okay, the validation of the model becomes very easy downstream. Because today, when you want to implement an underwriting model, it will take the life cycle of this from the time you start developing the model to actually rolling it out. If you're in a bank, right, it takes anywhere between 8 to 12 months. In a fintech, maybe it's faster, but the governance process around models, etc., are different in a bank and a non-bank setup, right? But the cycle where you start with data to model development to model validation with authenticated and consented data, where you build a model, it will be much robust, and much. I mean, it'll be pure authenticated to a large extent. That's one. Then when you assign limits, right, which is a multiplier on what the customer wants. If a customer wants 3 lakhs, a lot of banks today cut the limit and give it 3 lakhs. I mean, it most of the times, 40-50% of the time, customers are not satisfied with the loan amount sanctioned. That is because we are underwriting, we are taking calls on some of the limit assignment based on non-authenticated data. So the confidence levels of limit assignment to the expectation of a customer, because when a customer builds trust, right, when he gives consent to the when he gives consent to the banks to access his data, that means he is building that confidence and trust in the bank or the financial institution to give him a limit. So I think that reciprocity between both the customer and the financial institution with account aggregator is very strong. So limit assignment will be much better. We will expect customer confidence to go up, because if customer wants say 5 lakhs and we give him a 5 lakh limit, I'm sure that will have a big uh, customer wow, right? You have better ratings from the customer. So that is an important aspect of how you price and limit. And similarly for risk based pricing, so we can optimize, as I said, as we build the model, we can also price it better, right? With authenticated data, we will be able to remember, these customers are one authenticate, they give you authenticated data, they give you consented data, and it is non fraud data. So we have very high confidence on some of these data sources. So we think we can price those customers better because they have a banking setup, uh, they have transactions which fits the eligibility criteria. We are able to trust the data which is being given. So the tendency is that the propensity to default will be much lesser than what we bank on looking at other aspects of uh, uh, data, other aspects of the underwriting process. Okay, so and also remember, when you come to the next point, which is reduced cost of underwriting, when you have all data which is digitally available, authenticated and consented, you have models which work better. You have a frictionless process to a large extent. So your ultimate cost of delivery, cost of underwriting, okay, falls dramatically. So there, your combination of a risk-based pricing and a cost of underwriting, your propensity or your default, when you actually come to either collections or actually calculating how much losses you'll make, will be much lesser. So with that, I'll go to the next one, which is basically looking at the portfolio management area, right? So we have finished the credit origination in part of the cycle. We have finished the pricing, limit optimization, costs, etc. at the time of delivery. Now comes the next one, which is how do you monitor that portfolio account aggregator? A lot of people today have not thought through this properly, because using account aggregator, because you have consent from the customer, right? Customer has not withdrawn consent. Customer has given you consent to make sure that you can access, to understand what is his account balances. So can we put up a early morning signal where we do a post disbursal loan monitoring, right? We can do it today. Unless customer withdraws consent, I still have consent to access customer's information to understand whether he has enough funds to pay back, right? So we can build a early morning model around account aggregator. Okay. And remember, I'm only not looking at banking transactions. I'm looking at all customer profile information, whether he's defaulting, say, whether he's paying on time on a telecom bill, whether he is actually active there, right? I can find, and whether he's active in GST, whether there has been any GST action on the customer. So we can put a lot of these warning signals as part of the account aggregator access for a bank or a financial institution. Then we have a host of things we can do in collection management, which is basically debt collections, which is around automated natch requests, where we can align natch requests to automate payments of installments for when the user has the means to pay their EMIs. Today I will know if a customer is defaulting, whether if he has a couple of accounts, I can find out when is the cash coming in, cash going out, etc. We can put some of that monitoring as part of the customer consent. Now, customer withdraws the consent, that's a different issue. But if customer has given you consent and is not paying you, I can use some of those mechanisms to make sure our collection strategy is properly aligned to how we can collect from the customer. Then customized repayment. We can create a customized repayment experience. We can make sure that if the EMI date is say on 5th of the month, we are able to see salaries coming on 1st. That makes easy for a customer. If a customer is having an EMI date of 5th, and if the salary comes on 10th, then there is a problem, right? So we can work with the customer, find out, and then make sure that using account aggregator, we know the customer behavior, right? When a salary comes in, his EMI comes in, right? So we can fine tune our customer customized repayment for a customer using account aggregator setup. We can do collection segmentation. We can segment delinquent customers into customized category based just on a not past due methodology, but also on behavioral trends, right? If I'm able to see how customers cash flows move, right, it'll be easy for me to do a collection action. It can be a restructuring, it can be a more intensity. So we can do all those collection segmentation we with consented account aggregator information. Okay. Then similarly, we can customize communication to the customer. So we can, if a customer has got enough cash balances but is still not paying, we might have to increase intensity on the customer to get a promise to pay. Otherwise, if the customer is paying on time, we can give him a reminder based on his cash flow coming in, saying that your cash flow is coming. I mean, we don't have to say that, but we can give them a reminder saying your payment due, but we know that his cash flow is available today, and we can renegotiate. So we can do a lot of collections management today, which a lot of people have not thought through, because account aggregator is quite powerful. Because one example, in lending cards, we have around 25% of the portfolio on account aggregator platform, where the customer is not paying us. They are in delinquent buckets, but I can access those accounts because I have consent. Okay, so we have to adopt our collection strategies based on some of this. I think it's got a lot of potential, and the potential will only increase. Today it's only GST and banking to a large extent people are using it for. But imagine if account aggregator is able to give you information around health, around telecom, around utilities, around insurance. I think that's a huge, of course, all consented. That's a huge amount of information for improving the financial condition of the customer, and for also banks to make sure that the portfolios are managed well. So with that, I will stop now, and I will wait for any questions from the audience. Abhishek?
Please use Q&A or webinar chat option to ask any question. I saw a hand raise, but not sure it was by mistake or not. Yeah. So maybe I can start with my question, Vinod. So one thing,
Yeah.
like yesterday I was interacting with a product manager and he was saying that PL तो मिल जाता है 3-4 घंटे में, it's digital, but अगर आपको सेम 1 या 2 लाख का और 2-3 lakhs लोन टू MSME BL अगर आपको करना है तो it is not accessible. There are very very few, or it is very difficult to find lender. Any thoughts on this?
Can you repeat the question again, Abhishek?
So, yes. So my question is that right now getting a personal loan for 1 or 2 lakhs is very easy and you can get it digitally maybe in few hours. But when you talk about getting a business loan from a lender within 2-3 hours, maybe the same similar amount, it is a bit difficult. A lot many
There
documentation.
are 3-4 aspects for that. One is, see, for you to get an in principle approval is easy, right?
Yes.
That's not very difficult, because a lot of that is digitized today. Where customers might find a frictionless or process or friction in the process is getting the KYC complete, right? That's the first part. Second part is, today what does happen is, at least on SMEs, well, I'm able to discover, say, a couple of accounts from the customer, but I get consent on only one customer, one bank account. So typically we end up with asking for bank statements for all bank accounts, right? So that, I think, over a period of time, we should see an improvement where customer trusts the FIU to make sure that they're able to they're able to trust the FIU because they're applying for a loan with us, and so that they can get all the bank accounts given there. That's the second point, right? And there is some friction still available or is there in GST. So I think over a period of time, it should be easier. But to complete from the origination to disbursal, where you will find the bank account funded, is easier in a personal loan today, where I'm giving it to an individual with one bank account. That is more or less frictionless today. Up to 5 to 7 lakhs, I think shouldn't be a problem. But for a business loan, it's just beyond just an account aggregator. So I just want to make sure that that is very clear. That to get to a process where we have a company account to the disbursal, it does take time because of all the other processes which are still not fully digital. So in fact, we are trying to improve 20-30% of our customers coming in to be completed within a day. So that is our target, and we will look at how do we make it more straight through process.
Okay. So same day disbursal you're talking about.
Completed question answer, but yes, you have a friction in the process today, which I think the bankers, financial institutions are trying to resolve.
Okay. So we have two questions in Q&A. If you can just open up just on your left to share screen.
So the first question is from an anonymous attendee. While the FAA allows us to share the data securely between FIP and FIU, when it comes to risk management, is it just building the model and getting inside of a customer's activity then, or is it more than that? So I think I've explained during the course that there is a life cycle, and I've shown examples of where all you can use. It's just not the underwriting model. Underwriting model is one part where we take action based on authenticated consented data, and you'll have a better model actually, which will allow us to one move towards a more frictionless process, reduce costs of underwriting, and give better pricing to the customer. So that's one part, right? The second part is when you have consented information available today, okay, am I able to take necessary early warning models to monitor the portfolio? And how do I manage my collections better when you have enough number of accounts who have given consent to account aggregator? I think that a lot of people are thinking through still. There is a lot of potential there. We have not come out with the right strategy to do it, but I think we are beginning to do. How do I segment those customers who have account aggregator and get a different account strategy to manage the portfolio? So if I'm able to answer that question, we are able to get insight on customer activity. We are able to take action. We can also take action around customers' ability to pay based on balances. So I think it's some time away, but I think to answer your question, yes, we are looking at how do we manage a portfolio better using account aggregator, and it only increases if you have more and more data sources into the account aggregator setup today. Then the second question, I hope I answered, but if there's any question, you can always reach out to me through Abhishek. If you're still not very clear, where is the part where risk management is actually involved? Okay, I thought I went through the cycle, but I will tell you where risk management is actually involved. Risk management is involved in all the aspects which I put there, primarily in the underwriting activity, which is around creating an underwriting model, creating a model where we reduce dependency on documentation, and using account aggregated data. That has two aspects. One, it's authenticated. Second is you can't. It's not fraud data, so you avoid some fraud mitigation there. That's the second aspect. Third aspect is uh, you can monitor your portfolio better using the account aggregator ecosystem. Now, why I said ecosystem is just beyond banking. So we bring in all the other data sources. I think it only enhance our portfolio management activities. Then the final activity, which is in risk management, is around collections. collection segmentation, collection actions, and treatment in collections. It can be restructuring, it can be settlement, or it can be high or low intensity. So there are various aspects of risk management. I thought I went through the cycle, but if there's still a question, please reach out through Abhishek. Then the next question is, what do you think about the use case where the customer is NPA for at least 1 day and monitoring consent allows us to fetch account daily? Should a FIU aggressively fetch information and hit a collection the moment amount is available? Yes, because if you have consent and say, I'll give you an example. Suppose a customer has two accounts. He is given a consent to both the accounts, and your eNASH is only on an account which is either non-operating or no balances. We can, using account aggregator, we can always look at the other account and change our eNASH to get this. Or if you have eNASH consent, you can always pull the information from the other account, or you can follow the customer so that you know that the customer is only non-operative or no balances in one account and has balances in another account. So you can do various actions based on availability of information. Are you also using the data? Next question, sorry. Next question is, are you using the data to create a risk score for your customers and using the score is another loan journey? I didn't understand, but yes, we are using account aggregator information along with other data sources to create a risk score for a customer.
So, Denver or Anshuman, can you bring Abhijit on the call? He has raised his hand.
Yep.
Yes, Avijit.
Yeah. Abhijit, you can mute. Yeah.
Hey, hi, Manohar. This is Raghav. So I and Avijit, we are sitting together. So first of all, thank you so much for the session. So more than a question, so we wanted to have your feedback on and an aspect which we are thinking and even building on is around underwriting and credit risk assessment. Yes, during the session, we talked about customer behavior during repayment, early warning signals. So just to want to give you a different point of views around GST. So talking with, we have, researched and talked with different CROs, and we came across a problem, especially in SME financing, and that too in an instrument called invoice financing, which is short-term financing, is a problem of product mapping, right? Of getting a product's life cycle of a particular MSME. So what we were able to achieve till now along the lines is that we have fetched GST, and through the models we are training, we are able to predict on an invoice level or on a monthly level about a product and a repayment cycle of that particular MSME. So just wanted to have your feedback, how much weightage you will give, especially for SME financing and to an instrument called invoice financing or short-term financing, to GST along with account statement. Are Will India move towards the scoring mechanism as CIBIL, especially considering these two instruments? Why I'm focusing on GST is because of the fact of e-invoicing coming into the picture, when government has made it mandatory for MSME above 5 CR to bring e-invoice, and e-invoice by default automatically files your GST after 4 days. So it's by default a repository of a MSME. So as a CRO, wanted to have your opinion that how much weightage going further GST and account state will bring in.
See, Avijit, we have used GST for portfolio monitoring. We have not used so far GST for underwriting models. There is a reason for this. We have used GST only on two aspects, which is this active inactive status and data filing, so that we know that the variables around that has some weightage, and there are policy overlays on this. The view from our modelers have always been that we have banking account information for 6 months, and that has a good view on the turnover on the companies. I mean, whichever company is applying. What testing now is, because we are in discussion with a few providers of GST data, saying how frictionless can that entire process be. Okay, see, I'm looking at these two aspects, right? One is customer experience, and also at how much information I can gather from GST. Today, I'm using it extensively in portfolio monitoring. It
Okay.
has some level of friction, but portfolio monitoring is helpful because I know that I can get an income range. And I'm speaking to Samati to see more accurate information on portfolio monitoring, especially on revenue data. But I'm
Got it.
not using that extensively because I don't give very high loans, right? My max loans are 50, 60 lakhs. So I
Yes.
require more accurate GST information. But going forward, as and when the process becomes more frictionless, I will start using it in our models. Current models don't carry GST from a revenue perspective. But it's a
Got
very
it.
powerful tool, according to me. If you are going for high end or high ticket SME financing.
I agree. Just wanted to add my comments over this. So yes, you're perfectly right. So how we are treating it is especially for short-term finance and that too for a sachet size financing. Why? Because to the SME, I'm talking about micro and small enterprises, really small enterprises, right? For a lender to map it, their product journey is really difficult because because balance sheet doesn't provide the real data. Wherein if you track HSN history and then delve deep into GST, is what we are able to achieve is that you get a product history. For example, there's a company, you get to know which is the predominant product. Because this low scale, really small MSMEs, they are product led industry rather than depending upon a customer or a
Absolutely.
vendor.
No,
Yep.
I'm a full advocate of using GST. Um, that's why I am making sure that we are getting more accurate information so that we can consume some of that in our underwriting models. So far, because our focus, at least in lending card, has been not so much on the high end SMEs, right? We have focused on the
Exactly.
lower and
Yes.
small businesses.
Yeah.
And we think the banking transactions are quite powerful, but I know that it over a long term we'll require more income information, especially on more than 30 lakhs or 40 lakhs cases.
Yeah.
Yeah, we will start using GST. I'm pushing this very hard. I just want to make sure that the process is more frictionless because we don't have branches, so we are
Hmm.
more a digital player than other players in the market. Okay, so I have to be very, very clear on customer experience with a combination of what all variables I can pick in. And I'm a big advocate of Ajit, but of GST. We will make sure that we include that in the next model development as and when it comes up. I think by the end of the year.
Got it. Thank you. Thank you so much.
So any other question?
Anyone else who want to ask some question can raise the hand. Uh, and Manohar, if possible, we like to have at least 2, 3 slots or so if anybody wants to have one-on-one session, maybe just 15, 20 minutes, if possible, during
Let me know.
maybe next
I
week.
will look at my schedule and talk through this.
Sure.
Okay.
Sure. So if there are no question, we can wind up the call and maybe reach out to me if you have any particular question from Manohar. I'll redirect him to.
Thank you, Abhishek.
Thank
Thank you
you. Thank you
for
everyone for
attending.
joining.
It was a great session. Thank you, Abhishek. Thank
Thank
you.
you.